Welcome to Profiletraders. This is Reza and you're listening to my market analysis for April the 7th. So going back very briefly, I mentioned on a daily chart that 2065 would be reaching an upside objective of this current leg up. We did approach that level a couple of times. We couldn't really bring in more buying, and then market started to gap down here in this day here between this candle and here. We gap down, and I warn you that this gap down that failed to fill in the same day was a potential sign of a reversal taking place. Then as the market started to approach a significant level of support, which was 2034, we got something quite amazing going on. For the third time, Janet Yellen came out giving us the same baloney that we heard on the day of the FOMC, which is pretty much that she apologized for hiking the rates in December, that now her view of the economy was so damn wrong that from December that she was seeing things to be so strong, justifying a rate hike, to things now being so bad and so uncertain according to her own word, that the whole fantasy of 5 or 6 rate hikes for this year is out of the window. A matter of fact, she is much more concerned about everything and anything that she would even be concerned about further rate hikes. Then we heard that a second time about 10 days ago, where she gave a speech. Market again went up. And then yesterday, when we were at 2034, which I'll show you why it's an important level, we again heard the same thing from the FOMC minute, and again market acted as if it was the biggest surprise and the newest statement coming out of the Federal Reserve. So it became comic, and I was telling my trading room members how many times the market will hear Janet Yellen saying that she is surprised by the softness of the global economy, that she is concerned about our own supposedly full employment job market, etc., etc., and how many times the market will act surprised on the same statement. At some point, with 270 points rally, parabolic from 1800 up, shouldn't the market start to ask itself, why is it that the Federal Reserve is so concerned that they went from rate hikes to being completely frozen right now? And at what point is the market going to start to get concerned that possibly if the economy is so soft and further softening, does the current valuation justify this 270 points rally? So sure enough, what was yesterday a complete total scam, in my opinion, to the upside, was partially reversed during the overnight. And then today, when we went for a test of 250 and we could not break that level to the upside, and again left another gap open without the ability of going and fill it, we got a very shrewd reversal and came in and touched one of the POCs which I gave you several days back as a downside target, which was the 2026.5. And end of the day, very last minute, we got a bounce towards 2034. Now, why is 2034 so important? Because 2034 is the bottom of the bracket that we have tested 1, 2, 3, 4 times. And that level once broken, it was very normal to have seen the kind of push to the downside towards today's low of 2027, because every single soul that was long within this big bracket going from 2034 to 2072 got their stops hit, and this was a run over the stops. So now the fact that we came and closed within 2024 questions the validity of the current break. If we maintain today's low, there is a possibility that we are going to get now a bounce towards 43.5, and then if 43.5 is breached to the upside, we're gonna go deal with the main resistance level at 2050. Any given time that we do break the low of today, the next level on the downside, in my opinion, will be 2018. And if we do break 2018, there is really not much of a support left before we come and hit 2000. So without any question, without any doubt, the euphoria that has been going on in this market needs to come to a little bit of back to reality, and money has to reassess valuations under the current market situation and economic situation that is worrying the hell out of the Federal Reserve itself. And a correction back down to 2000 wouldn't be the end of the world. Corrections are actually a very good thing, because it allows some people to take profit off the table. It allows newcomers to step in and initiate new positions. The worst thing that you can possibly get, which is the absolute catastrophic disasters, are this kind of moves where they shut down one side. In this case it was the sell side, and it's only forced buying allowed, and you have no other option but chasing. And the number rule of every single bubble market, if you want to know if you're in a bubble market or not, ask yourself, do you have opportunities to participate at a fair price, or you are only forced to chase? If you think that you are forced to chase, you're better off not chasing, because most likely you are in a bubble situation, and the end results are usually the same way that it went up, the same way it will come down. So end result ends up being catastrophic. But a market that goes up, comes down, goes up, comes down, goes up, comes down, allow a natural flow of capital in and out of it, those are the markets or the trends that are healthy and last for a long while. So we shall see what happened here, but definitely today was on a very weak sign. We can still give it a little bit of a benefit of the doubt, because they managed to close it below 24. But since the buying came in very late into the day, that cannot be trusted much, because we did not have enough time to respond to that buying by bringing it back down. So the overnight will give us the clear picture of what should be expected. As far as crude, we got a little bit of an oversold bounce, because as I explained the last time, we dropped from 42.5 to 35. That was a 7 points drop, and then from this point we got a little bit of a overbought or oversold bounce, which came in and hit one of the two POCs that I mentioned, the 38.20. There is another one above at 38.60. So now I believe we are going to be in a trading range trading, meaning that price will settle itself between $39 to $36 or $35.70. And I don't believe it's going to either trend up or it's going to either trend down. It's just going to be a very chaotic back and forth, each day contradicting the other one, until this whole scenario of what OPEC will do or not do during their meeting in month of April is behind us and we get a better picture of what the strategies will be. As of right now, support or resistance number 1 is 38.12, resistance number 2 is 38.6, and then 39. On the way down, support number 1 is at 37, support number 6 36.6, at which point if broken we should have no problem coming down and hitting the next POC down there at 35.70. So this was Reza. If you wish to learn market profile, join my trading room on a daily basis. Learn to trade live. Educate yourself with market profile. Check my website, profiletraders.com. I am also offering a 2-day trial if you're interested to check it out. Thank you for listening, and to the next time.